Our investment process has 4 key distinct steps. In the first step, we identify those companies that we believe will benefit from the transitions our economy will go through, mainly on the demographic side, but also technological, environmental and governance related trends. The second step in our process is where we fundamentally analyze the companies. We want to make sure we invest in companies with high barriers to entry, sustainable competitive advantages, solid management teams with the right governance structure, and access to the right finance. Furthermore, we also want to make sure that those companies don't take irresponsible risks. So ESG research is a very important part of that second step in our process. In the third step in our process, we value those companies. When we believe there's a 20% discount to the intrinsic value of that company, that's when they become eligible for inclusion in the portfolio. The fourth step in our process is the actual portfolio construction. We create a portfolio around our 50 highest convictions, making sure that the geographic distribution of the strategy is more or less in line with the MSCI World. We further fine-tune for the desired risk characteristics. We also want to make sure in that process, in the end, that the portfolio as a whole is biased towards companies with a positive impact on sustainable development goals, but also is in line with a 2-degree global warming scenario. All decisions for the global sustainable equity strategy are made by the portfolio management team based here in Boston with me. So that's myself, Amber Fairbanks, and Hua Cheng. Every decision we make in agreement. We also are assisted by the portfolio management team of Mirova based in Paris. They are specialists in European equities. We also have within Mirova 10 ESG specialists. They also play a very important role for us as an input in our investment process. All decisions are made in-house, but to support those decisions, we also rely on external data providers, mainly for environmental, social and governance data. The key providers we use for that are ISS ESG for broader ESG information, Carbon4 for carbon footprinting of our portfolios, and Bloomberg for other important ESG and more financial data as well. In terms of buy and sell discipline, we only buy companies from a valuation point of view that are trading at least a 20% discount to what we believe is their intrinsic value. Again, from a valuation point of view, we don't want to hold companies in the portfolio when they're trading above a 10% premium to intrinsic value. But very important as well is that we have a sell discipline driven by the view we have on the ESG characteristics of a company. We have developed an in-house proprietary rating system going from committed to positive, neutral, risk and negative. We can only invest in companies that are rated neutral, positive or committed. This also means that when one of our analysts downgrades a stock to risk or negative, we sell immediately. The main financial risk indicators we look at are beta, tracking error, and standard deviation. Our tracking error is typically between 3 and 5% relative to the MSCI World. We have a beta close to 1 and a standard deviation which is pretty much in line with the standard deviation of the MSCI World as well. But more than just financial risks, we also look at the ESG risks of the companies we invest in. In our portfolio, we don't invest in companies that we believe take irresponsible risks. As a long-term, responsible investor, we believe it's very important that the companies we invest in understand exactly how we want them to run their business. Active engagement with the management teams is therefore very important in our process. Equally important is that all our votes are cast in line with our ESG voting policy.